I'm John Batchelor with Larry Kudlow, my colleague and co-host of CNBC and Kudlow Radio on the weekend, and David Malpass of the Trump campaign, as well as NCIM Global. Gentlemen, the corporate taxes I celebrate. The personal taxes, the surprise was that the Trump campaign moved from a very aggressive 3 categories to the House plan advanced by Kevin Brady of Ways and Means. How did you interpret that, Larry? Is that a retreat, or is that just embracing the strength of the House Republicans?
I think it was a brilliant move, and our campaign had been looking at a higher top rate to begin with, and whether it was 30 or 33% in the sort of final strokes of the discussion and debate, those were 2 key options. There was also a 28% option. But I think at the end, Mr. Trump decided to go with the 33, in fact, to go with the Kevin Brady plan on the personal income tax. That was an olive branch. That was a reach out. That suggested good cooperation on tax policy. It was absolutely a brilliant maneuver in my view. And it suggests also, John, if the Republicans carry all 3 houses, and they work together, you could get a powerful pro-growth tax reform bill using Senate reconciliation 51-vote rules. Maybe not January, but you can get it by February or March if your ducks are all in line. So I thought Trump just did exactly the right thing.
David, what would that do for the investor class as well? Because the middle class invests in the markets.
You know, we've been kind of running on fumes for a while now. GDP growth is weak and profits have been particularly weak. So the stock market's getting propped up by the hope that something will change going forward, will improve. And so I think this would, for one, validate the current levels, but then also begin to point people toward future profit growth. Now, obviously, one of the problems the market has to digest is the implications for the bond market. We've been at these remarkably low bond yields, meaning super high bond prices, and so that would probably begin to unwind itself, and people are going to worry about that. But remember, in 03, 04, 05, we saw higher bond yields, yet stock prices were able to go up with the growth rate.
And the 90s and the 80s. Because, you know, I'm a believer, Dave, particularly these medium and long-term rates are reflections of the outlook for economic growth, which includes the so-called TIPS real interest rate, and the outlook for inflation. So the way I look at it, bond rates rising because the market believes a powerful pro-growth policy package just might win, then bond rates rising would be very, very healthy. And would, you know, might have a little effect on stocks in the very short run, Dave, but eventually be very bullish. You know, in the 90s, what do we have? We had basically 10-year bonds at, 5-6%?
Yeah.
Not $1.50 like today. That's because the economy was growing at 4%. It was, by the way, the same in the 80s.
And the inflation was lower back then. John, one of the interesting things is how the market tends to time these events. When George W. Bush proposed tax cuts in early 2003, the market didn't react right away, but as it became more likely that they were going to happen, then the equity market really took off. That was it, starting in April and May of 2003, as it became clear that there was going to be a tax cut. So one of the timing events for the market right now is when it begins to actually smell the possibility that this will happen.
Trade.
What you got here, let's just review the bidding. I'm calling this a very powerful pro-growth package. You've got income tax rates 12, 25, and 33. You've got business tax rates at 15 and 15, large and small. You've got the regulatory reform about which David was talking. You've got tremendous energy reform, another pro-growth measure. You know what else, Dave, in there? Nobody's really talking about it. He wants education reform, right? He wants consumer choice to send their kids to good schools. That's a terrific program.
And what do we have from the Democrats, Larry?
Well, there you have it. All right, Hillary's going to talk tomorrow. We'll see. But so far, in her whole campaign, all we've heard from her is a big bunch of tax hikes on rich people, rich corporations, Wall Street, lately, trading, taxes on financial trading, the door may be open for taxes on carbon. She wants to destroy the energy business. She's already ended coal in her mind, and she's going to take out fracking if she gets
and punish inversion, punish companies.
And higher taxes on small business. Remember, a key part of her platform.
That's right, because she's got surtax. So let's look at this. As David said, this economy is very, very, very slow. All right, we are perilously close to recession. It's been true now for a while. But you're under 2% on trend. You're under 1% now, roughly around 1% in the last 4 quarters. So how do you fix a recession? Do you raise taxes? Do you re-regulate? Do you hike spending? Or do you lower taxes, reduce regulations, limit spending? Which is the truth here? It is such an incredible contrast as long as Mr. Trump makes it so.
David, we have a minute. How did you measure how it was received yesterday in Detroit? It looked good, but I just see things on video.
There was lots of clapping, interrupting, and pretty positive response. And I think even most of the commentary after was pleased to see a coherent plan. You had 4 interlocking parts of the program that were all aimed at the same thing, which is more prosperity, getting unleashing the economy. That was the theme, and so I think that all went well together. Now, of course, the Monday morning quarterbacks want to pick apart every part, but the big picture issue is that you're going to have more growth, more jobs, more people drawn into the labor force. That's a critical part of having more small business activity under this program.
David, before we run out of time,
20 seconds left.
My note in response to your note today about the deficit issue. Please go back and look at it because I said you were spot on.
Oh, yeah.
The issue here is growth, growth, growth.
Larry Kudlow, David Malpass, both talking to the candidate, Donald Trump. I'm John Batchelor.